Hello, everyone, and welcome to this week's expert. This is Sandra Ray, CPA. Yes, she does exist. And she is a nonprofit CPA in this group. So, uh, first of all, welcome, Sandra, to this Meet the Expert series.
Thank you, Alesha. I really appreciate the opportunity to be here.
Yeah. So, tell us about your experience as a nonprofit CPA.
Well, I've been a CPA for over 35 years, and I have always worked with nonprofit organizations. I started out working for another CPA firm doing the independent financial audits. I worked as a CFO in a couple of nonprofit organizations before starting my own firm about 25 years ago. And because of the acceptance of virtual and remote work in the last 5 years, we've really been able to expand our reach outside of my little local area to all across the country. And I'm just so excited to be able to do that.
So for those people who don't know, what is a CPA? And then tell us, how does that unique skill help you, personally, professionally in the accounting world?
That's a great question. A CPA is actually a licensed accounting professional. Each state has their own licensing requirements, and that usually requires like a bachelor's degree in accounting. There's a work experience component after graduation where you're mentored by a CPA for a certain number of years. Of course, there's the CPA exam that you have to pass. And then after you get your CPA license, there are continuing education requirements. My state requires a minimum of 40 hours per year. Some of 20 of that has to be in accounting and auditing, and then the rest is in whatever I want to grow my area in. But every state has slightly different requirements, but it's really a state licensure.
Right. And so, how does a CPA specializing in nonprofits help people in nonprofit work?
There are many aspects of accounting that cross every industry and that are the same in every industry, but every industry has its own unique compliance and regulatory requirements and accounting requirements. And and if you're unable to comply with those requirements, there's some pretty nasty things that can happen. It could be as, a minor fine. It could be loss of your tax exempt status. So having this experience in the not-for-profit industry, I've seen a lot of things that people are doing right and things that people are doing wrong. And I'm able to identify the problems pretty quickly and draw on my experience of where I see things going really well and be able to help people fix some things or make things a little bit easier for themselves, or just be able to make sure that they're aware, like provide a checklist and say, hey, every year you have this, this, and this you have to do. So there's a lot of things that we can do to help you make sure that with the regulatory and the compliance issues, whether it be federal, state, or maybe even just something that a grantor wants, like a grant report, we
Mhm.
can help with those because we've seen a lot of different ways of it being done.
Yeah, and I love that you are nuanced in that way. When you specialize in nonprofit work, you have those nuances that a regular CPA doing taxes for Joe Public is just not going to understand or know.
Right. Like I would never try to do a tax return or compliance things for a bank. And I don't think the CPAs that specialize in banking would attempt to do a 990 either.
Yeah.
Although they get asked just because they're on the board.
Right. So, what is the first thing aspiring founders need to know about accounting in their nonprofit?
We kind of talked about it a little bit. As a tax exempt entity, we get that privilege of not being able or not having to file an income tax return. And and many of our organizations that are public charities actually get to receive donations that are tax deductible to the donor. So for these privileges, we have a lot of compliance requirements that we have to follow through with. There's compliance on what we can spend our money on. There's compliance about how we raise money. There's reporting compliance of federal, state levels. There's just a lot of compliance and regulatory issues. And I think becoming familiar with that can be overwhelming if you've never done that before. So I think that's probably the biggest thing for a new person. Obviously, there's lots of different jargon in every industry. So when you come to something and you don't, like we talk tax exempt or public charity or 501c3 or 501c6, knowing that the nuances between those, learning the jargon sometimes can be tricky to navigate. And then restrictions on how you can spend your money, not only what the government requires, but what a particular grantor requires and how to track all of these different pots of money separately. And then on the revenue side, we've also got with our donors, if you're a public charity, you have that public charities test where at least 33.33% of your income needs to come from public sources. And what is a public source and what's a disqualified person? If you have one donor who's too large, they get disqualified, and how that test works. Because if you don't pass that test after your first 5 years and every year after that, then your public charity status could be in jeopardy. You might be considered a private foundation, which is a whole different ball
of wax, huh?
Yeah, regulatory wax. Yeah,
or red tape, whichever one you want to.
exactly.
So you mentioned the term public sources, public income. Could you give us a brief definition of what that is? Because I don't think a lot of people know that term.
Yeah, generally it's individuals, companies, governmental entities that are giving smaller gifts. So if you get one donor who's too large, and there's a calculation of what too large is, it's 2% of your income over 5 years. If you get a donor who's too large, like say,
But what if it's a founder who's been putting money into
that could affect it as well. So you really want to watch. It doesn't matter. Perfect example is like the Bill Gates Foundation. That is a private foundation. Bill and Melinda Gates put all the initial money in there. Doesn't mean you can't do good work. It just means you operate slightly differently. What's included is, any source of public funds. So say you get a grant through another organization, but the original source of the funds is their federal grant, that's public money. So you have to really dig deep and find the source of the funds. And we're looking for those big donors, and do we have to exclude them out of the numerator of our percentage calculation?
So basically, we're looking for individual donors that aren't over 2%.
Right.
Of the income that came in?
Of income over the last 5 years.
Okay. We're looking for businesses, companies, churches, those kinds of entities. And then we can also put in government grant funds, right?
Government grant funds are public.
Okay.
There's no, they always go in the numerator.
So our public foundations, are they considered public money?
Yes, it's the original source of the funds, no matter who it's channeled through.
Okay. So if we stick to those income sources, 9 times out of 10, we're going to be just fine.
Yes. Okay. And if you're in your first 5 years, you don't have to pass it. We just track that you're getting there. And most of the organizations, Alesha, that you and I work with don't have an issue if we don't have a founder who's not contributing a bunch of money. Maybe in the first year they're doing that, but we have that 5-year period to get to before we start calculating that test. And And I was going to say something else and I lost. But yeah, it's for most of our organizations, it's not difficult. Most of the 990s I do, we're like 50% and above. It's just something we need to be aware of. And maybe we have to time a donation that we know would be considered a disqualified person. Maybe we have to maybe get them to spread it out over several years or ask them to delay a year, that kind of thing.
Okay. Yeah, so it's good to keep track of where your income sources are coming from.
Yes.
Okay, so let's see what else. Oh, what are some of the common questions you hear when it comes to new nonprofits?
Well, for founders who are wanting to get started, the most common question I get is, which application do I file? The 1023 EZ or do I have to do the full 1023? And the answer is always, what do you think your 5-year budget is going to be for revenue over the next 5 years? If at any point in time you're going to exceed $50,000 for more than 1 year, then I say do the full blown 1023. And I know it's longer and it's a little bit more expensive, but you're safer doing the full blown 1023. If you file the EZ and you exceed it, the IRS is going to look at that and say, okay, maybe your assumptions weren't right, or maybe you knew you were going to go over $50,000 and we're going to revoke your tax exempt status. So it's not an automatic revocation if you go over 50,000 in that first 5 years, if you filed the easy form, but certainly something the IRS is going to look at. And why take the chance that they're going to look at that and maybe revoke it? So that's a question I get all the time. It's like, why can't I just do the easy form? It's easier and it's cheaper. And it's like, yeah, no, it's the
Yeah.
long-term ramifications are too risky in my opinion.
Okay. So it's better just to suck it up and go ahead and pay the money and put the work into it and be
Yep.
covered for the next 5 years.
Yeah, exactly. Because it is a bit more work and the fee is a little bit more, but in the long run, it's well worth the investment.
It's peace of mind. You're not going to
Yes.
get called out for the next 5 years on that
Yes.
particular.
Yeah. Or asking donors not to give you money because you can't exceed $50,000. It's just that's just crazy.
And that would also be if, say, like year 3 or 4, if you got like $150,000 grant, right? That
Right.
would also.
Yes. Yes.
Okay.
Doesn't matter the funding source. It's the gross revenue of 50,000. Now there's a definition because it's regularly, but there's a very strict definition. It's like you can't exceed 80% and blah, blah, blah. So
Right.
it's
Yeah. So that scenario where later on down the road, you're not thinking that that opportunity might come up, but it does, you get it. And in that scenario, you might be in trouble.
right. And it's not an automatic revocation. It's
Right.
something you might have to explain to the IRS.
Right.
So do you
And
want
we don't like explaining to the IRS if we can help it.
if we can help it? No.
We don't like doing that.
uh, Another question I get a lot from organizations that are just starting out is how to set up their accounting system. What is it? What's the best thing? There's a lot of accounting applications out there. And probably the best thing for you to do is just look long term and say, don't go to the first free accounting application because in 2 years you're going to be switching over to something else and you're going to be spinning your wheels and making that conversion from this free thing to the thing that you're paying for. So just go ahead, bite the bullet, set up your accounting system, use an application. We use QuickBooks Online a lot. A lot of people hate it. Um, but it is affordable and it's fairly simple to use. We do use other accounting applications, but QuickBooks comes like preloaded with a chart of accounts and you can integrate your your bank account with it. So it brings the information in and you're just categorizing transactions rather than doing all the data entry. So it reduces errors, and other software programs do this as well. I'm not promoting, or nor do I get a kickback from QuickBooks. It's just one that we use a lot because it's got a pretty big market share out there.
Well, and I want to add too, if you are a 501(c)(3) and you have an account with TechSoup, you can usually get QuickBooks really cheap. So
Yes. Yes.
yeah,
That QuickBooks, you can get anything IT. There's website hosting, there's website development, there's, IT consultation, there's Microsoft licenses, there's,
I know. It's an awesome site.
yes, very awesome. So awesome, I'm not allowed to join.
Yeah, me neither.
So, but I mean, I've seen organizations get an accounting license for the same price to pay for a year subscription that I pay for a month.
Yeah,
So that it's really worth jumping through their hoops to get registered.
yeah, it is. Okay, so what are nonprofit founders' typical challenges in the 501(c)(3) process, and how can they overcome them?
Well, from my perspective, I come from the finance side.
Right.
So financial pressures to do more with fewer resources. I mean, that's the biggest thing. And the way I like to overcome that is budgeting, having a plan of what we want to accomplish this year and how are we going to pay for it. And then looking to the future and what do we need to do to get to where we want to be? How much funds do we need to raise? Do we need to raise just a few more to get to next year? Do we need to find a multi-million-dollar grant to get to where we want to be in 5 or 10 years? Just having that budget and that financial plan really helps take the pressure off, because you've got the plan and then you just have to follow it. Now, every budget is, your best guess. So things change and you have to adjust. But just having that in place and having everybody on board, because the board usually approves that, then that
Mhm.
filters down to the executive director and the entire team for their pieces. And it sets the expectations for what we need to do this year.
And I think it's important to point out that you mentioned the budget is your best guess. And I get that question all the time. Founders are like, "Oh, what if I mess it up? And what if I don't know?" And I'm glad to hear you say that you just guess it. You go out, you find how much stuff costs, pick a number in that range, and just go with it.
Mm-hmm, mm-hmm. Exactly. And I always start with, if you've got a couple of years under your belt, I always start with the prior year and add an inflation factor. And that's my first draft. And then it's like, okay, do we think we're going to raise more money? Are we going to get a new grant? Is there a new program we want to implement? And I build on that from there.
Right.
So I love budgeting. It's fun. It is, for me, it is like, where do we want to go and what do we want to do with this organization and how can we best serve our constituents and complete our mission? And so that's a lot of fun for me.
And what is the percentage that you would suggest to inflate the budget if you're using the previous year's numbers?
I usually look to the consumer price index, and I usually maybe inflate expenses a little bit more than I inflate revenues. Just to be really conservative. But usually, like for this year, for 2024 budgets based off of 2023, we've been using like somewhere between 5 and 6%. Because that's where we thought the consumer price index was going to end up for the end of the year. We were pretty close.
Okay, yeah, that's good to know. I've known that was a budgeting technique, but I've never heard if there was a set percentage, or where you've even came up with that percentage. So,
Just Google consumer price index.
okay, awesome.
Free and easy. Yeah. The other thing that I think we talk about when, founders start looking at things that they need to ever overcome is, like we talked about before, regulatory requirements, just looking for those experts, especially if you're new to nonprofits, look for those experts who have experience and let them mentor you. I think that's the fastest, most effective way to overcome that obstacle. And then for me, in the bookkeeping and accounting world, software integration. We struggle with that on a daily basis. Does your credit card processor talk to your donor management software? And do they both talk to your accounting software? And do your banks talk to your accounting software? And how do we get everything into the accounting software without duplicating transactions or without missing transactions? So those hurdles as far as the bookkeeping side of things sometimes can become uh, cumbersome or difficult. It's better than it used to be. There was a lot of software that says, oh yeah, we integrate with that and that. And it's like, yeah, that doesn't exactly work. We're a little bit more complex than your integration.
Yeah.
But most integrations work a lot better. And then there's some applications that kind of bridge the gap between two applications, like your donor software and your accounting software. So there's a lot out there. So you may need an IT person to help you with that kind of stuff as well.
Okay. Um, let's do one more question because I know
Mhm.
we're short on time. What are the legal and tax implications of fundraising activities?
The legal implications depend upon the state that you're in. Every state has its own laws and compliance regulations. And so when you're fundraising, you have to comply with the laws that are in that state where your donors are located. So you may have to comply with regulations of not only your state, but surrounding states, or maybe even all 43 states that require charitable solicitation registration. So that's a thing that you need to get your head wrapped around as far as legal implications, as far as are you required to register? Are you required to give an annual report to that state? And is there a registration fee or a filing fee with those requirements? Uh, California tends to be the most restrictive, not surprisingly. But there's actually 43 states in the US that require charitable solicitation registration. And all they're trying to do is give the donors an opportunity to look up your charity to see if you really are, not a scam. And in this day and age, I think that that's really important for donors
Right.
and for
And
our
then,
industry.
yeah, and then what kind of tax implications for fundraising activities can you think of? Just some of the common ones.
Okay. The biggest one being tax exempt, we're not subject to income tax. So we have payroll taxes and those kinds of sales tax that we are subject to. Payroll taxes for federal and state, sales tax, you have to look towards your state. Many states require, if you have like a store or a website store, you're going to have to collect sales tax and remit that to your state, more than likely. But for income taxes, if you're doing any fundraising that is considered unrelated business income, and the easiest way to say it is, are you competing with a for-profit entity? Are you doing something like, I think I can't remember if it's Yale or Princeton.
Mhm.
They somebody's will were given a bakery and they ran the bakery and they had to pay UBIT tax on the bakery, but it made money for the university.
Right.
So that's something that you might want to consider. You have to think about, as far as you may not be exempt from income tax just because you have this tax exemption or this IRS determination letter. It's what activities are you performing, and does that fall under unrelated business income?
Okay. This has been very informative. I appreciate you coming on. So, if anybody would like to contact you outside of the group, how would they go about doing that?
Yeah, our website is www.sandraraycpa.com, and there's a bunch of RAs in the middle there. We also have a Facebook page, and then my email is sray@sandraraycpa.com.
And I would also like to encourage the members of this group to go to your group, which is what, No Nonsense Nonprofits. Do I have that
Yes,
right?
yes.
And I'll make sure I um, put that in the comments or the description wherever you're finding this video, all that information. But I have thoroughly enjoyed it, and thank you so much for being here.
Thank you, Alesha. I'm happy to.